We spoke not that long ago, Charlie Aitken coming out, I think it's a week or two ago, suggesting you've got to be underweight the banks. Geez, off the back of today's result, I don't know if you'd want to be underweight CBA long term, would you?
Yeah, I certainly agree, James. I mean, another one for the record books. It was a very solid result coming out today. But as Mike mentioned, looking at that dividend, that was very strong. And I think potentially that's why we did see a little bit of a sell-off today. We saw that payout ratio increasing to 75%, still within their targeted range. But I think there is a little bit of concern now that we are starting to see these dividend yields increasing. And this might, in fact, now start to put a bit of pressure on that share price and might start seeing investors selling out, which may in fact be where Charlie Aitken was coming from. So I think in terms of those dividends, still looking very strong. As Mike mentioned, that net interest margin as well, and those bad and doubtful debts, which still do look very low, and those were two of the areas that we were focusing on. Having a look at this stock, it really has been a very strong performer. Back in January 2013, in fact, we initiated a buy on the stock, and it was at about $60. So now trading all the way back above $80. So had a very strong run. As a result, we do think probably potentially going forward, we may in fact start to see a bit of that growth slowing down as we start to see some of the benefits of those lower bad and doubtful debts and those write-backs starting to fade. We are expecting to start seeing some of those bad and doubtful debts normalising to more of a higher level around that 25 to 30 basis point area. Of course, we saw it coming in at around 16 basis points, so potentially could see that starting to creep up a little bit. And we do think that may start to put a little bit of pressure on this stock, but overall a very, very strong result today.
And what did you make of Suncorp?
Again, a very strong result today and really exceeded expectations on all fronts. Looking at some of the main numbers, those insurance margins were very strong ahead of our forecasts. That net interest margin, again, up 8 basis points, as well as that final dividend, and of course that special dividend, which was really the standout. We saw it coming in at 30 cents per share in comparison to most expectations out there of 20 cents. So really that was the standout. But across all of their businesses, their banking business was very strong, and we really saw quite a nice turnaround from some falls that we saw previously. That general insurance business, again, net profits up about 14% off the back of some lower natural disasters claims coming through. And of course that life insurance business really has been an area that's been coming under pressure. Their net profits up 50%. So we are starting to see some of those pressures easing, which is good to see. So overall, a very, very strong result today, and we certainly did see investors reacting well. I think it closed up about 2.6% in the end.
Leanne, your thoughts on the session and near-term outlook for the market?
James, look, unfortunately a little bit of a disappointing day today, but probably to be expected given those leads, and of course, as you've been mentioning, investors still a bit cautious around those geopolitical tensions. But certainly coming into our reporting season, as it really does start ramping up, we did see some fairly mixed earnings coming through today. But looking at the better performers, that healthcare sector up about 0.9%. That was led higher by CSL, which came through with quite a strong result. And of course, that discretionary area, again, a strong performer, as you've been talking about, following that consumer confidence data, and that was also led higher by Echo Entertainment. The worst performer, however, being that information technology sector, which was down a huge 5.5%. Again, that was dragged lower by some disappointing results that came through from Computershare and Carsales as well. That materials sector also did come under a bit of pressure. We saw some commodity prices falling off overnight, and also some fairly weak data coming through from China. I think the outlook for the market, I think we are going to remain sort of a bit cautious. Investors are going to continue sitting on the sidelines until we do get through this reporting season. I do agree any talk about the Fed increasing those interest rates is going to result in caution from investors and a bit of volatility in the market, but also some of this weak data that is coming out of China, as we did see today in terms of that industrial production, and those fixed asset investments coming through are below expectations. I think all of that certainly going to continue having a bit of pressure on the market. We may in fact continue to see a bit of a slide, and potentially this correction continuing.
Leanne, just on car sales, down over 6%. Did the earnings result, do you think, justify such a sell-off?
It was a huge sell-off today. If we have a look at those numbers, they actually did look quite solid. But I think the market was probably factoring in quite a strong result to come through, and it probably didn't meet the market expectations. If we look at those numbers, net profits up 14%, earnings up 15%, and revenues up over 10%. But that was all below our forecast and below guidance as well. It's had a very strong run sort of over the last 2 years or so. So I think that investors probably were disappointed. And certainly I think probably seeing this pullback today, we think that it might be a bit of a buying opportunity. We do still like the outlook for car sales despite this fall off that we've seen today in terms of some of their growth opportunities going forward, particularly in international markets. We do think that management is going to continue focusing on that. We know recently they acquired that 50% interest in Stratton Finance to complement their loan business. So all looking pretty positive going forward. It was a disappointment seeing that stock price falling off, but as I said, potentially could be a bit of a good buying opportunity at these